All right, let's talk about 1099Ks. So these aren't anything new. They've been around since 2011, 2012. Now, keep in mind, I'm not an accountant, um, but I just have a good idea of how these things work. Any, you know, official financial advice, you should talk to an accountant. So, what is a 1099K? It basically reports that you've received money from a platform, whether it be a PayPal, a Venmo, um, or some kind of online marketplace like a eBay, Amazon, Etsy, StockX, anything like that. So 1099Ks used to only, if you did 600 transactions or more, no, sorry, 200 transactions or more, or $20,000. Now, I guess they're lowering that threshold to basically $600. Why do they do this? I actually think they're doing this to cut down on retail arbitrage. What retail arbitrage is when you go into a retail store, like a big box store, and buy the hot gaming console. You could buy that gaming console for $500 and flip it on an online marketplace for $800 to $1,200. So what they want to do, they want to make their money on that. They want to get their tax dollars for that transaction. Most people do that just once. And I mean, if you're lucky to get a console, you can do it one time. Um, and they want to get paid on that. And the whole retail arbitrage thing, it's pretty rough because there's some people who can, get the $500 console and they want the $500 console, but they can't get it because everyone's trying to resell it. They're trying to put a stop to that. It's hard to do that on the retail level. Some stores are like limiting you to gaming cards for you can only get like 5 or 6 packs of gaming cards, where people used to fill their shopping carts with gaming cards and sell those online too, at a profit. So basically, they're trying to cut down retail arbitrage, and there's many different levels of that. And so basically, what the 1099K does, it says that you received $500 for selling something. It doesn't mean you made $500. They don't expect you to make 100% profit on anything you sell. So you just have to report what that was. If you buy, say, a guitar, from some dude for $200, get a paper receipt saying you bought it for $200. If you flip it on an online platform for $500, you have your $300 profit, but you want to report your expense. You want to report your selling fees. You want to report the payment processing fee. You want to report your packaging fee, your gas driving to the UPS store to drop it off. You don't make $500 when you sell a guitar for $500. You might end up netting $350, so you really only have $150 profit. But you need to report that $500, and then you report the all the loss that you have with that, and those are your expenses. So basically, you just need to keep track of that stuff. If you have old gear that you don't have receipts for, I'm no accountant. I'm sure there's something that you can figure out with your accountant to account for those sales, but you just need to report the sales. You're not If you don't report the 1099K income, I know this for sure, that they will hit you up for the full amount of the 1099K that was reported. Another thing to note, most 1099Ks do not account for refunds. So say someone buys something for $500 from you and then you end up issuing them a refund on that platform, your 1099K should still account for that $500 transaction. So when you do your taxes, you need to account for that bad business expense, which was the $500 refund. So that ends up being a wash on your end, but it does show on the 1099K, so you do need to report that. Again, I'm not an accountant, but you should definitely check into that stuff and keep track of all those things. Different selling platforms do allow you to run those reports so you can get all those things, but it's really good to at least keep a spreadsheet showing your expenses, that being shipping costs, and all that. On the Reverb platform, when you go to each payout, they'll give you a breakdown of what the reverb fees are, the payment processing fees are, and your shipping expenses, and you want to account for all of those. So you should have a spreadsheet with, multiple columns and all that. I mean, if you guys really want, I can help put together like an example of what a spreadsheet would look like. I use an accounting software that keeps track of all those things for me, but I still have to account line by line for each one. In the accounting world, which basically when you run a business or you know do this kind of stuff, you end up becoming an accountant more than a salesperson. It's kind of crazy, but yeah, I like it's crazy the amount of stuff you have to account for. But it's nothing against you know the average person buying and selling gear. What they're doing this for is the people that are making like real business out of doing retail arbitrage, and this basically helps crack down on that. And it's actually really good for the economy, because then people who really want these items and can use these items can get them at the retail level, if people are really going to be discouraged enough from doing the retail arbitrage thing. So just keep track of what the gear you're buying. Anything you buy from, someone on like a Facebook marketplace for like $20, you know, get a receipt for it. Even if you're paying $20 cash, that is an expense, and you want to keep that, expense of that purchase. If you're going to be planning to resell any gear, so just keep track of all that stuff, and you'll be good.